Two short shows, Tony. Welcome back to the show, Tony. Welcome back to QAV, Tony, here at the Sydney Cricket Ground. FMG, Tony's in the news today. How are you, Tony? How's Cape Shank, Tony?
Yeah, good. Not as sunny as the SCG, but it's.
Do you want to attempt? Do you want to attempt your South African accent? I do Richie. You do. Who was the other guy?
Tony. I'll just get my keys and stick them into the wicket now. Look at that crap. That's more Irish, I think, isn't
it? Yeah, they're close. Yeah. Close enough.
Yeah, I can do Benno.
Everyone can do Benno. If you grew up in the 70s and 80s, you can do Richie Benno.
And Billy Burningham's version of.
I think we're all doing Billy Burningham's version of Richie.
What's today? The bone, the brown, the off-white, the white, the grey. Well, the third test starts soon. At least that'll be a distraction from all the wonderful news happening in Australia this week.
We were just talking off air about that. We are reluctant to talk about it on the show. It's horrible, horrifying news happening here at home and overseas. And although I will mention this, I was talking to Taylor. Both of my boys in LA at the moment. But Taylor called me and he said, "Did you hear that the FBI foiled a plot to set off explosives all around California on New Year's Eve?" And I said, "No, I didn't hear about that." I looked up the news. So the first thing that got me was a far left terrorist group that were going to set off the bombs that the FBI magically employed
since the 60s, when they realised that the far left couldn't organise a tea party.
Well, they were infiltrated by J. Edgar Hoover anyway. But the funniest bit is the name of the group is the Turtle Island Liberation Front, which is a splinter group from the Order of the... Yeah, Splitters. That was your one line in our film, wasn't it?
It was, yeah.
Splitters. They're a splinter group of the Order of the Black Mumbo or something. The FBI are just making up fake, far left sounding names. It's like... So I'm reading Bond.
It sounds like that's exactly my experience. There'll be a guy in a Hawaiian shirt sitting at a bar, sipping pina coladas going, fuck off, I'm the People's Front of Judea.
No. I guarantee you the FBI created a group, a fake far left terrorist group, managed to find a couple of loonies to say, "Oh yeah, we'll join that," and then arrested them and said, "Look, we caught some far left terrorists." It'll come out in the courts in a year and it'll all blow over and people won't, remember. I'm reading the Bond novels. Well, I'll talk about it in after hours,
okay.
But I'm reading Live and Let Die now. I finished Casino Royale. I'm reading the second one. And just relishing the chauvinism, mid 20th century white British aristocratic chauvinism in it, which I have thoughts on. But it sounds like something that, is out of a Bond novel, something Schmersh would have created, the Turtle Island Liberation Front. Oh, those sneaky Soviets and their sneaky front groups.
Oh, it sounds like something from a Thomas Pynchon novel, or what was the guy who used to write what's his name? Carl somebody? Write the story set in the Florida Keys.
Oh.
Carl Hassan.
What?
Yeah.
Oh, okay.
Always involves some guy in a Hawaiian shirt sitting in a bar thinking up crazy ideas.
Well, crazy ideas, Tony. Let's get to the market. It's a crazy idea. Our portfolio's down a bit this month. The market's been a bit sort of depressed the last couple of weeks. Our dummy portfolio is down 0.35% in the last 30 days versus the index down 0.14%. If I look at all time, we're up 16 versus 8 for the index, so we're doing double market there. The light portfolios, all time up 20% versus 10, doing double market. Again, last 30 days, light portfolios up 1% versus negative 0.17 for the index. What's doing well? Oh, EDU. EDU's up 34% in the last 30 days. That's kind of bonkers. But good job, EDU. Let's get into the news, Tony. Our friends at FMG, the Vale of Australia.
I think Rio's the Vale of Australia, by the way, not FMG. But
Probably,
anyway,
yeah.
it's a fine distinction.
I think iron ore, I think FMG.
Yep.
They're going to spend $151.7 million to acquire an undeveloped Peruvian copper deposit that has faced significant opposition from local communities over the past decade. The friendly takeover bid for Toronto-listed Alta Copper would give Fortescue control of the Canariaco copper project in Peru, provided Alta shareholders approved the deal on January 26th. Fortescue already owns more than 1/3 of Alta and voted off 4 of its 7 directors in mid-2024, meaning the Explorer always loomed as a likely acquisition target for the Perth-based giant as it seeks to diversify beyond iron ore. So, what do you make of all of this, Tony?
Well, I think we're going to have a copper theme to today's episode because it's becoming the new iron ore. I've got a couple of other articles to talk about in a similar vein, but the iron ore miners are trying to get into copper in a big way. And if I can jump ahead to my notes, one of the reasons is China's coming off the boil a bit in terms of its infrastructure spending. So, I'm just going to pull up.
Oh, no. Don't tell me China's collapsing, Tony.
Well, it's not collapsing, but as I said in our US show last week, it's back in the 90s and the noughties, the investment by China into infrastructure made BHP, Rio, especially Fortescue's, just made careers basically, because it was growing at double-digit growth rates. And that's sort of coming back now to what is still really good, sort of 5%. But in the last little while, I think in the last week or so, they came out with numbers to say they weren't even doing that now. And there's been a bit of hand-wringing around the world, particularly in the boards of iron ore companies, about what that means. So I'm just trying to find the particular. I can't find can't quickly find the article I'm looking for. But yeah, so China, I think, people were expecting about 5% growth, at least in terms of its infrastructure spending, and it's fallen below that by a couple of points this quarter. So I think iron ore miners see the writing on the board that even though China will continue to have demand for iron ore and continue to be strong, it's not going to be like the glory days. On the other hand, however, particularly because of the data center needs for AI, copper's going through the roof. And, I've been reading about articles about planned AI data centers in Australia, and there's been lots of articles recently with headlines like, will Australia become the AI hub of the world? Which is complete rubbish, because they're talking about a couple of large data centers. I'm not going to downplay how large they are. They're bigger than anything built before, but they're not big compared to the rest of the world. But I think if you're talking about 400 gigawatts, which is a lot. I think, to put some scale on it, what I read was it's about the size of the output of a power station, a sort of normal qualified power station you'd find somewhere in Australia. So it's a lot of usage going into a data center. And they're kind of casting around, promising to build these things and then finding they can't get the power supply they need. So one solution is that they build big batteries, and of course big batteries need copper. And data centers themselves need copper for cooling and for infrastructure and all the rest of it. So copper is a metal which will be needed not just for data centers, but for the electrification of our energy grids as well. EV vehicles are a big user of copper, etc. So copper has gone up in value, and there's a bit of a shortage happening. Some of it is being blamed on the Trump tariffs for things not mined in the US. So people have been stockpiling copper in the US, which has created shortfalls around the world, which is a temporary sort of price spike. but it is highlighting the fact that we won't have enough copper mined to meet future demand. Rio and BHP have been saying this for like the last 10 years, but they've stubbed their toe in a couple of acquisitions. BHP in particular has a history of buying things and destroying value, including, you can see it in its name, BHP Billiton. There was almost like a reverse takeover of BHP at one stage by a smaller company called Billiton, because BHP was so desperate to buy the company that gave away BHP to do it. And there's been other value destruction acquisitions, which anyone can read about if they go into the history of BHP. So they're a bit gun shy. They tried to buy a big American copper mine, which rejected their offers, and they went with somebody else, which is now happening in Canada. And, the question mark is, do they do the right thing and not overpaying for it, or will they miss out on the boom of the next, 20 years or 30 years? So copper's an interesting thing. I'm going to do a pulled pork on a copper mine, which is on our buy list, and maybe expand about that when we do get to that stage of the show.
I wonder if there are any synthetic alternatives to copper.
I don't know. I haven't heard of any, and certainly haven't heard of any that are cheaper than digging it out of the ground, which is fairly expensive.
Like carbon nanotubes or something like that we could build to replace copper. Because as I understand it, copper mines take a long time to get up and running, like years to decades, and the world's running short.
Yeah, and I think one of the issues with copper in particular is that it's fairly diluted. So when you mine copper, as I understand it, you're, for every ton mined, you're pulling a couple of grams of copper. It's not like stubbing your toe on a nugget and pulling a kilogram of gold out of the ground. It's a bit different.
Mm. Yeah, it's amazing to me that, we haven't figured out a smarter way to do whatever copper does.
And maybe someone will.
Yeah. No, I'm sure people are thinking about it. Got a question from Scott, who, two things from Scott, and Scott's volunteered to come on the show as a guest over Christmas.
Oh, lovely.
When you take your little golfing holiday.
Well, it's not golfing. I'm going to going up to Healesville with the family and meeting up with other families and friends for a Christmas lunch this time next week.
Nice. Well, while you're doing that, I might get Scott on for a chat at some point. But he sent me a question in an email which I missed, so it's a little bit out of date, but I'll read it anyway, and then we'll do the update. He says, good or bad, Perseus delivers superior proposal to acquire Predictive Discovery. Perseus Mining Limited is pleased to announce that it has delivered a definitive binding offer to acquire all of the issued shares in Predictive Discovery Limited that it does not already own via an Australian scheme of arrangement. Perseus currently holds 70.8% of the Predictive ordinary shares outstanding, blah-de-blah-de-blah. Perseus has been informed that Predictive's board of directors, in consultation with Predictive's financial and legal advisors, has unanimously determined that the Perseus binding offer constitutes a superior proposal as defined in the arrangement agreement dated 5th of October 2025 between Predictive and Aeris Resources. So, we love Perseus Mining, one of the great stocks of the year. How's their superior proposal going, Tony?
Well, I don't know how it's going because I haven't looked at it since last week when we talked about it. But I think, is it a good idea or not? I think acquisitions are always hard. Perseus has a good track record of acquisitions. They operate in Western Africa, and this is a company that they're trying to acquire operates in Western Africa, albeit in a different country. So it will diversify their exposure in Western Africa, which is possibly a good thing. And they've long thought about owning this company because they have a stake already in it. And I guess they were prompted to act because Robeck came along and offered a takeover of Predictive Mining. And Perseus thought, well, we'd rather own this ourselves than be 18% shareholder of somebody else's operation of the mine, so lobbed a bit. So without going through line by line and looking at the numbers, and even if you do, there's often grey areas like how much synergy will happen from combining two companies. But I think Perseus have been interested in this mine for a while. I think they've been forced to act by the bid lob by Robeck. I think the chances of them succeeding over Robeck are probably a little bit better because they already have a cornerstone stake, and they'll obviously vote against Robeck if it gets down to a fight. But, whether Robeck comes back with an even better offer is in the lap of the gods, so we'll see. But yeah.
I have an update for you.
Okay, go ahead.
Dated today, 16th of December, from update on predictive acquisition. Perseus Mining refers to the ASX announcement made by Predictive Discovery that a revised arrangement agreement has been received from Aeris Resources on 11th of December 2025, and that this revised Robex merger has been determined by the Predictive Board as having matched Perseus's definitive binding offer. As a result, Perseus' proposal is no longer deemed a superior proposal as per the terms of the arrangement agreement. La-di-da-di-da.
Yeah.
So, yeah.
Could be a good old takeover tussling, couldn't it?
Yeah.
And that'll be the difficult thing for Perseus shareholders. If you don't want to overpay for this, they're better off selling into a high bid from Robeck rather than paying up for Predictive. That's my kind of generalised assessment without knowing the detail. I don't know how important it is for Perseus to own this company, but I suspect if it was going to be critical, they would have acted before now, given that they've amassed some stake in the company in the past.
Right. Well, we do love the folks at Perseus. They've been very good to our portfolios.
And I should say I own them too.
I think we all own them. I think everyone owns Perseus. That's why we've all had a great year.
Was Perseus the Golden Fleece? Was that the story? Is it Perseus and the Golden Fleece?
Oh.
I was going to say, is Perseus mining our Golden Fleece?
Wasn't it Odysseus?
Yeah, I'm not sure.
And the Golden Fleece? What did Perseus do? He beheaded the Gorgon Medusa and saved Andromeda from the sea monster Cetus. Yeah, not sure about the fleece. Fleece? No fleece.
Okay, got that wrong.
Jason and the Argonauts and the Golden Fleece.
Right.
Anywho, what else have I got? Scott, also, I did ask people to let me know how their portfolios are going. I heard from a few people we've referenced over the last couple of weeks. Scott says, I'm up 14%, including dividends this year, so still not at your levels, but still roughly double the ASX. And this is despite a slow pre-QAV start. Even with the recent drops, my portfolio since I started applying the QAV rules is up 21% or so. He's a relatively new member, Scott. I think he started about a year ago. Honestly, I just look at the buy list, do some very cursory research to make sure I haven't missed anything important, and then buy. Referring to my point about QAV, taking QAV to the world, this is nuts results when you look at the returns much higher profile active investor companies are getting with their significant marketing support, etc. 12 months ago, I had never bought a share in my life and only had an ETF with about 20K in it. So you've taken an investing amateur and delivered me some brilliant results despite all the market madness. Good stuff, Scott.
Thanks,
Scott. There you go. Well done. Well done. System works. Scott did come back to me with some good ideas for things that we should be thinking about doing next year, which I am thinking about. So thank you, Scott. All right. That's everything I got. Tony, what do you got?
Okay. Saw an interesting article in the Wall Street Journal recently about one of Warren Buffett's lieutenants leaving. So we've talked about Todd and Ted before. They were two people who were tipped to be replacing Warren as CIO of Berkshire Hathaway. One of them has been given an operating business to run, and the other one I think was still doing investment. But Todd Coombs, the Todd of Todd and Ted, I'll read the article. Berkshire Hathaway is losing one of its top stars just as Warren Buffett makes his exit Todd Coombs, the stock picker who stepped in to lead the turnaround of Berkshire's Geico auto insurance arm, will decamp for JP Morgan Chase. So interesting. Interesting timing, given that Warren steps down in a couple of weeks at the end of this year. And I just wonder what that means for other senior people at Berkshire Hathaway. Could be opportunistic by the bank poaching senior staff out of Berkshire Hathaway at a critical time, but it could also be a vote of no confidence in Greg Abel or somebody else at Berkshire Hathaway. Or it could just be that Todd decides he liked working with Warren and Warren's going, so who knows. But very interesting timing, I thought. And I really think that when Warren steps down, it's a watch this space at Berkshire Hathaway to see what happens.
Yeah, very interesting.
So that was the first thing.
Maybe,
Yeah.
sorry to interrupt, but maybe you're like, you know what? Berkshire is it's never gonna be as good without Warren and Charlie in the chairs, and time to cut your losses, and rather than be one of the guys that gets said, well, like Tim Cook managed to pull it off, but it could have gone in the other direction for Tim Cook, right? He could have been the guy that ruined the thing that Steve Jobs built. So,
My opinion, he has, but anyway.
It's making a ton of money.
He is, yeah.
And the share price is booming. Warren was pretty happy about it. But yeah.
Yeah, and look,
I've
often thought Berkshire Hathaway would be a takeover target for a breakup into its operating units. And what better way to start that process than to poach a key lieutenant and pick their brains as to do? Where are the skeletons? What's the real valuations of these different units? As a way of starting that process. But I'm drawing a long bow there, so we'll see.
Okay, what else you got?
Yeah. So this might go onto your TikTok this week, but going to have a little bit of a cautionary rant about an article I saw in the Fin Review last week. And this is about the First Guardian and Shield failure. So if you recall, there were a couple of funds that collapsed with circa sort of 300 million, maybe a little bit more, owing to investors. Macquarie Bank came out and compensated all the people who are using the Macquarie platform for their losses, but the other people who are using other investment platforms haven't been recompensed. There's all sorts of inquiries going on, but there is a I'll call it a bailout fund. It's not called that, but there's a fund which the government set up through contributions from the banks, I think originally, and now from other financial institutions, which is meant to be the compensation fund of last resort. That's been stretched to its limits, and now the government is looking for other ways to top it up and then to use it to recompense people who were hurt by the failure of the First Guardian Fund. And look, it's not a bad idea, but one of the things that they're considering is to ask SMSF funds to contribute to the fund, to the bailout fund. And I think that's a mistake because, and they're also, I should say, thinking about having large super funds contribute to the fund. But again, I think that's a mistake. There's moral hazard here. It's the platforms and the rating agencies and the financial advisors who should be contributing to the bailout fund because it's their shortcomings which allowed this to happen. It wasn't necessarily super funds, and it certainly wasn't SMSF individuals who caused this to happen. And some SMSF, self-managed super funds, aren't part of the platform universe, like mine, for example. And I know I'm talking through my hip pocket here, but I've avoided the platforms because I know there are fees involved and I know there are risks involved, and I do it directly myself. So why should someone outside of an ecosystem bail out people who were hurt in that ecosystem when the problem was the ratings agencies and the platforms? And the reverse is also true. If I suffer a loss or if one of the things I invest in goes to zero, I don't expect to be bailed out by the government or any sort of compensation scheme. So I think it's a bit rich. I don't think it should happen. I think it's wrong. And I'm hoping that the real people who should have been watching with the First Guardian Fund and funds like it the right kinds of funds for investors to be put into, and are the ones who compensate any losses if that's the way that the courts or the government rules. It's a bit, to me, the analogy is a bit like charging flies a fee to compensate families for flight disasters, because the government doesn't want to do it, but it creates a warped incentive for the airline operators to wipe their hands of any sort of responsibility. They can keep pushing the envelope on making money and taking risks, knowing that if something bad happens, then they're probably going to get a buck from the government. It's not a good look for the financial services industry.
Don't you understand how corporate socialism works, Tony?
I do. That's why I'm trying to nip it in the bud before it happens. But that's exactly what's at play here. And hats off to Macquarie for doing the right thing in compensating people for people who are on the Macquarie platform, but the other platforms haven't.
Too big to fail, Tony. To bail out the corporate risk takers.
Yeah, it's a bit, yes. I don't think any of these companies are too big to fail in this case, but it's more that Macquarie has pointed the way to say, look, it's a risk we should have seen. We should have been a better watchdog on offering this to retail clients, and they weren't, and they've compensated, and that's the correct response. But look, Macquarie isn't the only platform out there, isn't the only financial advising network advising people in this matter, and yet the government's looking to other people in the industry to have their tickets clipped to pay for the bailout fund, and I think that's
Yeah.
okay. So that's that. That's my rant for this week. I found the article on China infrastructure. It's just seen here. The iron ore price is holding above $100 at the moment, but I wouldn't be surprised if it starts to continue to decline below $100, and $100 is kind of seen as a bit of the bellwether for a collapse of the iron ore price, if I can put it that way, or a decline in the iron ore price continuing. But if I look at the article originally from the Financial Times, but reported in the Fin Review, headline is China investment falls for third straight month in blow to the economy. China's investment fell for the third straight month in November. Official data showed just days after President Xi Jinping called on officials to reverse a decline that threatens to undermine growth in the world's second largest economy. Fixed asset investments for the year to November 30 declined 2.6% on a year earlier, a steeper fall than the 2.3% decline forecast by Bloomberg. So, I keep reading that, but that fixed asset investment is, I guess, another way of saying infrastructure. And that's what is a big user of steel, which of course is reliant on iron ore. So as that comes off the ball in China, whether that's a good thing, bad thing for China, or whether it's entirely appropriate for the stage of its environment, where it's now kind of focusing on expanding the middle class and giving them good jobs and all that kind of thing, rather than necessarily going out and building new cities and roads and rails. That's neither here nor there. It's probably appropriate for the stage in the cycle that China's at. But it does mean there'll be less iron ore shipped to China in the future, and that's a concern for the iron ore companies, and one of the reasons why they're trying to get into copper. And there was an article on the Fin on December 4 saying that copper is now harder to find, and the headline reads, inside the growing global hunt for copper, data centres and green grids are heavy users of the red metal, but mine supply is stagnating and new discoveries are rare. Demand for copper is being boosted by the construction of grid infrastructure for the green transition and to power data centres for artificial intelligence. These need between 27 and 33 tonnes of copper per megawatt of power, according to miner Grupo Mexico, over twice the requirement of conventional data centres. So, it's basically what I said before. Copper's going to be a big benefit, will be used a lot and will be a big benefit of the AI data centre boom that's going on at the moment. And just as an aside, have you seen the stories and articles about building data centres in space as a way of powering AI? So that's kind of interesting development.
I watched Elon and Jensen Huang giving a talk at the Saudi US Innovation Conference a few weeks ago, and Elon talked a lot about that. That's sort of his plans, is to build the data centers. You said, the great thing is you don't need to worry about dispersing heat. It just goes out into the atmosphere and it's powered by the sun and all that kind of stuff. Yeah.
Yeah. So it does make some sense. And perhaps, I don't know if they use more or less copper, but, it could be cheaper than doing it on Earth as well, if they're not having to cool them anyway. So, yeah. Anyway, and then the last article I read is the thrust of which says, was from Chanticleer in the AFR, and the thrust of which is, are mega mergers in the copper industry a sign of late-stage copper? So the copper price has actually been going up for most of this decade, and it's sitting at a new high. This was an article on the 9th of December. The $92 billion deal that BHP and Rio missed could define copper battle. The mining giants will watch the copper-led merger between Anglo American and Teck, TECK, with a mixture of fascination and frustration. Do they miss a big opportunity? On Tuesday evening in London and Vancouver, shareholders of mining giants Anglo American and Canada's Teck will approve their $92 billion merger, one of the biggest deals in the history of the mining sector. The frustration mainly emanates from BHP, which tried to buy Anglo last year with a $75 billion offer, and then had another shot in November with an offer worth a reported $79 billion. In both cases, Anglo slammed the door on BHP's ambitions with minimal engagement, which still rankles inside of BHP. For the best part of a decade, BHP and Rio have been telling anyone who will listen that the coming copper boom will transform global mining as demand soars 70% over the next 25 years thanks to urbanisation, the energy transition and the digitisation of the global economy, which has been turbocharged by artificial intelligence, etc., etc. So very, very interesting. But one thing that has been happening with both these two companies, and particularly with BHP, is that they have been boosting their copper mining anyway. So BHP has boosted copper production by 28% and built out the world's largest copper reserve across 4 big growth options. Its South Australian copper basin built around Olympic Dam and a suite of assets picked up through the acquisition of Oz Minerals in 2023 for $10 billion. The Resolution copper asset in Arizona, it also bought the Vicuna copper business in Argentina and the expansion of the Escondida mine in Chile. Copper now accounts for 19% of Rio's earnings, up from 13% a year ago. But at BHP, copper is 45% of EBITDA, up from 29%. So if you're a mine watcher and own shares in BHP or Rio, which I know a lot of people do, copper's the new iron ore for them. Expecting iron ore to not have the rivers of gold going forward, but copper to be on the increase.
Speaking of commodities, I should probably just do an update of the commodity status for this week for people that haven't had a look at it. Iron ore became a Josephine this week. Gold became a buy again. Thermal coal still a Josephine. Coking coal still a buy. Crude oil still a sell. Copper still a buy. Platinum became a buy. Aluminium still a buy. The other big change was LNG became a Josephine. So now we have crude oil as a sell and LNG as a Josephine. So that's interesting.
I think so, especially as it's the northern winter as well. Normally oil prices go up in the northern winter.
I wonder if this has anything to do with the Ukraine conflict.
Probably, I think, without knowing much about it, it has a lot to do with the Russian sanctions, how Russia's getting around them and still supplying a lot to the market, I would have thought.
Yeah, I guess what I meant was if that this peace deal that is being touted comes to pass, maybe part of it is a removal of those sanctions.
Yeah, and it's also interesting too that Venezuela is perhaps the biggest oil reserve in the world, even though it's a different grade to what's used commonly, grade of crude. It's bigger than the Middle East. And, I don't know if people are reading into the market that more oil is going to come into the market from Venezuela or not, and that's keeping the price low. Who knows?
Could be. Anywho, What else you got?
Yeah, so I'll do a pulled pork in a minute, kind of copper gold miner. But just one last thing, late news. I read today that the ASIC report on the ASX, so the company ASX that runs the ASX, the stock exchange boards, came in. Pretty brutal reading if you're an ASX shareholder, and the market voted with its feet and the share price is down. But just one quick quote from James Thompson in today's AFR. The totality of the panel's findings is incredibly damning. Not only did the ASX prioritise financial returns over its privileged position as the key steward of Australia's financial markets, but for all its grand talking about making Australian markets stronger and more vibrant, it didn't really care about becoming a better market operator itself. So, going back to the evils of capitalism and running things for the public good, that's another example.
Yeah.
Okay, the other side, I've got a pulled pork to do, Cam, on Aeris Resources, if I'm pronouncing that right. AIS. AERIS. How do you pronounce that, Cam?
Aeris.
Yeah, that's what I thought.
Haven't you done them recently? I feel like we did them like last week.
Well, I had the same feeling. It's not in our list of pulled porks, and I remember doing it about 5 years ago. So it was in the first year, I think, of our podcast series. And I remember it because we had a big debate about how we treated a company that had more than one commodity that it mined, and how we found a commodity chart for that company. And we started to look at its revenue split or its profit split between those commodities. And this one, Aeris, I think, is almost neck and neck, and that was the issue for us. Which one do we use? And I think it alternates between copper and gold. But in this case, now it doesn't matter because both copper and gold are buys. So whichever one we decide is the more dominant, and they seem to be fairly even in terms of split. For this company, they're both doing well. And that's another reason for picking it today, is it's to extend this copper theme for our very own buy list copper miner.
Episode 437, Tony. It's when you did it.
How long ago is that?
A few years ago.
Yeah.
September 2021 was the last time we did it.
Yeah, I thought 5 years ago. That's 4 years ago. Okay.
We did talk about Robert Milner's departure from the board last week. That's why it was fresh in my mind.
Oh, okay. Was it this board that he left?
Yeah.
Yeah. Okay.
Yeah. It was Aeris Resources.
Okay. Well, I checked this morning, and Sol Pat still has a large shareholding in the company anyway. So I haven't seen any announcement about a replacement, but I expect Sol Pat will want to have someone on the board of this company. Okay, so let's go through it, because if you like the copper theme, this is one to have a look at. And it's also a reasonable size. ADT is $2.6 million for this company, so one of the bigger ones on the buy list. It's a mid-tier precious metals producer. They have 2 producing operations, and they call out 3 development projects. And a lot of these, both of their operating mines have fairly large tenements, and they're still drilling and exploring on those tenements, and have some reasonable prospects that they can continue to develop into further mines. So they say an excellent platform for growth, and it's probably fairly true. So 2 cornerstone assets: the Triton mine, which is a high-grade underground copper mine located in central New South Wales near the town of Nyngan. And that's on a 2,330 square kilometre prospective tenement package as well, and includes opportunities for expansion, which were already kind of underway for the Murrawombi pit, Constellation, and Currajong and Budgery potential mines. Murrawombi pit's interesting. It was an old copper mine slated for rehab, but because the copper price is booming, they're going to re-strip the mine and push off the rehabilitation of it, which means they save a bit of money on rehab, but they're also making money now that they can afford to continue mining in the Murrawombi pit. And they also have a mine called Krakow, which is in Queensland, about 500 kilometres northwest of Brisbane, and that's their mature high-grade gold mine. They also had assets in North Queensland, which they've recently sold for $15.5 million, and last I saw that was expected to complete soon, and that was the Mount Collin mine, and that also had tenements, one called the Barbara Project, which looks promising, but they decided to sell that rather than go through the capital development required to continue with it. They also have over in WA an opportunity called Jaguar, which is currently focused on copper zinc. It was a mine called it's called a brownfield opportunity, so it's an ex-mine they can restart, but they're also doing gold exploration in the area, which is proving promising in 5 prospective areas. The Jaguar mine is currently on care and maintenance, which is costing a couple of $1 million a year, but they may well start that up again in the future. And they also have the Stockman tenement in Victoria, which is also copper, zinc, gold, and potentially silver in terms of what the feasibility study is showing. And they're projecting a 12-year mine plan for that Currawong mine in the Stockman area. And their feasibility study, and are deciding to shore up their proposals to proceed. Couple of things I noticed in their results. They are a high-cost gold mine. I didn't pick up on what their copper costs were, but their latest quarter said their all-in sustainable costs for gold operations are 3,692 Australian dollars per ounce in the September quarter, which is kind of fine given that gold's selling for 6,500 Aussie ounce, so there's a margin there. But I asked Google Gemini what was to give me some examples of ASX gold miners, and it said in late 2025, the all-in sustaining costs vary, but many major miners like Northern Star hover around 2,100 to 2,300, or some like Evolution Mining target even lower costs at 1,400. So a few other examples, mid-tier miner like Genesis was around 2,300. So this company's at the higher end of that. Whether that comes down if they do go ahead with some gold expansion, whether it comes down as they get out of North Queensland, which is being sold, I'm not sure. But that it's certainly a case that looks like this company's making hay while the prices are high. And if they continue to go higher, good luck to them. Another interesting part of the finances for this company is a thing called environmental bonds. So, hadn't come across this in the detail that they were called out with in Aeris' case, but I'll go through it quickly. Aeris Resources holds environmental bonds, which are financial assurances that the government requires that when they do exit their mines, that they have sufficient funds for the rehabilitation of those mines. And one of the reasons that Washington H. Soul Pat was involved in the company is they provided a $60 million guarantee facility for these environmental bonds. And along with the fact that the company has to hold $80 million in restricted cash, and that covers all their requirements for environmental bonds. And that was refinanced with WHSP, Washington sold Pats recently. They did have, prior to that, a $50 million facility from ANZ. They also did a capital raising last year, which I think may have repaid a fair bit of that financial guarantee. They raised something like $80 million at the end of this year. So the cap raising was $80 million in October, and a share purchase plan for another $10 million, which closed just recently. And that's been used to repay debt. So interesting sort of financial instrument, these environmental bonds, and they've been partially backed by a bank, and then Washington sold Pats. And now it looks like that debt has been covered by a capital raising. The other thing about that we could see in the financial results this year is that AIS is now profitable versus a loss in 2024, and I think perhaps even for the year before that. FY25 results was revenue up 37 million, net profit up 69 million, resulting in a net profit of 45 million from a loss the year before. So doing well this year, which is probably why it's back on the buy list, throwing off cash again. I said before, Soul Patts has a stake. It's 31% stake in Aeris Resources. So a bit of history. Aeris acquired Soul Patts' copper business Round Oak for $234 million in 2022. The cash and scrip deal saw Soul Patts join the register and Soul Patts' Bob Milliner being admitted to the board. They also replaced Soul Patts' debt in April, which I said, with another capital raising $70 million. And part of this article in the AFR on the 29th of October states that the shares have gained more than 100% this year. So they're on a rebound. What else can I say? They also bought, as part of this buyout of Soul Patts Mines, the company Round Oak, they bought or they acquired the flagship asset, which was the Jaguar zinc, copper, silver and gold mine in WA. That was previously owned by IGO Limited, which is in the Eastern Goldfields region, 250 k's north of Kalgoorlie. And it made a profit in January. But however, the mine was, or the Jaguar mine itself was talked about being in care and maintenance in the most recent announcements I saw. So that may well come back out of care of maintenance, especially if they find something worth mining, or if the copper price and gold price keeps going. What else can I say? That's probably about it. So I guess my take on the history of this company is it's done a lot of acquisitions. It's now selling off the North Queensland assets. And if you're thinking about buying into this company, it's just done a capital raising. And you've got to be prepared, I think, to expect more capital activity in the future, which is always an issue for these kind of small to mid-cap mining companies. They'll try and grow both organically, but they also have one eye to the fact that their mines won't last forever. And they're usually sort of a decade long before they become investable, but they may not get to 2 decades, which means they need to continue to raise money and either acquire or continue to explore. So that's just something to tuck away in the back of your mind if you're thinking about buying into a company like this. To go through the QAV numbers, stock price used is 54 cents, which is above IV1 of 23 cents, but below IV2 of $1.26. The current stock price is 87% of consensus target. Company doesn't pay a dividend, so we can't score it for that. Stock Doctor financial health and trend is strong and steady. Stockopedia, interestingly enough, have a quality rank of 70, but an overall rank of 95 due to higher rankings for value and momentum. But they give it an F score of 8 out of 9. So I thought that was interesting. It scores almost perfectly for its F score, but its quality rank is only 70. So I'm not sure whether Stockopedia are still looking at the company which was carrying $80 million worth of debt or not when it came up with its quality rank. Can't tell. But overall rank of 95 is very strong. The PE for the company is 11.8, which is the highest in the last 3 years, even though making a loss for probably half that period, we can't use a lot of PEs to compare that to. Prop cap is only 4.74 times, which is good. Net equity per share is 28 cents, so we can't buy it for book or book plus 30, which I guess is also a reflection of some of the goodwill it's carrying from its past acquisitions. Forecast EPS growth, however, is 174%, so growth over PE is 14.6 times, which is way above a cutoff of 1.5 before we score it, so we like that. Doesn't have an owner-founder. Directors only hold 1% of stock, but the executive chairman's got a reasonably meaningful stake in the company, I guess as a personal basis. We can't score it for that, but it's kind of good to see that he's got about $4 million worth of stock himself. As I said, Soul Patts has a cornerstone stake in this. Bob Milliner left last week. We don't know why, but I expect Soul Patts may replace him. I mean, it's not a wild part of fantasy to say that perhaps they're looking to sell their stake and he has to get off the board while that happens. We just don't know. There's too much vacuum around his departure to know what's going on there. But until recently, he was on the board. The company is not a new 3-point trend line uptick. Net equity per share is not consistently increasing, so I can't score it for either of those. Forecast IV, interestingly enough, is twice the share price. And so IV2 is $1.26, share price is 54 cents. And that's very rare on our buy list to find a stock which is current share price is less than half its IV2, which is based on its forecast EPS. So that's a pretty good thing and a fairly rare thing on that checklist. Total for quality is 10 out of 15 or 67%. QAV score is 0.14, which is more towards the bottom of the buy list than towards the top. Risk for this company, I think the biggest risk for anyone going into this company is that there's a risk of further capital raisings. If you don't want to be diluted, you should participate in those. Not always mandatory that you do. You go case by case, I guess, but just be aware that if you have a stake or you're buying a stake in this company, it may not be the last time you're asked to top it up. It has a high all-in sustainable cost for gold, and therefore will be more sensitive to the gold price coming down than some of the other companies in the gold mining sector, which will have bigger margins that they can eat into before it becomes stressed. It's heavily reliant on exploration, this company. If the exploration schedule it's currently doing doesn't bear fruit, then it's a lot of wasted capital, which will be an issue, which may lead to further capital raisings or for the board to look for acquisitions instead, or both. On the positive sides, Washington saw something in this company. They're pretty well known as a value investor. They've got very good credentials in the area. If you look at New Hope Mine, the coal mine, which has been on the buy list before, it was spun out of Soul Patts after they developed it. And the other thing to see as a positive is copper is trending on AI data center usage amongst other reasons. Gold is trending as well. And the FY25 numbers are much improved. So there's a few things to like about this company.
Thank you, Tony. I'm just trying to figure out where it's gone. Or last time I looked on it, what did I say it was? 37.
September 21, I think 2000? You said.
Yeah, September 2021. Share price was about $1.05. It's now 52 cents. So it hasn't had a good stretch, but if you did buy it January 2024 when it was at 9 cents, you'd be very happy with it. But yeah, it's had a bit of a rough ride.
Can't disagree with you.
Having a rough ride,
Cam, and capital raisings and divestments and all the rest of it. So it has had a rough ride, but this year it's been good. It's back on the buy list.
Speaking of having a rough ride, I mentioned that LNG was Josephine, and I just noticed that a couple of alerts popped up for Woodside. It's just become a 3-point sell today. So I own that in my super, and it's possible on one of the light accounts. So if anyone holds Woodside, by the time this comes out, it may have gone back above its sell line. Sell line is $24.17. It's $24.05 at the moment. So when you listen to this, if you haven't already checked your alerts, if you hold Woodside, have a look and see where it's at. If I check the news, there's nothing about Woodside I can see in the news, so just general stuff. Business as usual. Nice. Now we into after hours, Tony?
We are. That's all I've got.
Thank you, Tony. Aeris Resources. What have you got for me this week, Tony?
So not necessarily a book or a movie, but have you come across Kalshi or Polymarket, the prediction markets that are trending quite widely in the US now?
I think I have heard of Polymarket, yeah.
Yeah, so they remind me of Betfair. There are two sites, and there's probably other ones as well, which are allowing people to take bets on things that might happen, including things like, who's going to be the next person to leave the Trump White House, or which AI is going to be rated the best by the end of 2025, et cetera, et cetera. So it's a bit of use for this in terms of the wisdom of crowds, and, if you have a question about where you think things might go in the macro sense, these sites might be a guide for you, not to like use them. But yeah, they're trending. I can't for the life of me see why they aren't being regulated by like gambling companies are, because Betfair, which is one that I use, carries a lot of similar sorts of markets like political markets and some event markets. Certainly Polymarket and the other one are looking at a lot of a bigger range of things to bet on. Some of them are quite arcane, but they are taking bets on who's going to win the next football match and things like that. So that to me is just straight out gambling. I can't see why they're not being regulated by gambling companies.
Is there wisdom of the crowds and that sort of stuff?
I think overall, yes. Like if the fact that you can be an index investor and make money to me says yes, but does the crowd always get it right? No. Contrarian investors are living proof that the crowd doesn't always get it right. I think, yeah, generally yes, specifically no. And we've talked about my bets on, political outcomes before and how I make money arbitraging. And that's generally going against the consensus for what will happen and saying, hey, that just doesn't gel with the facts I'm saying. But then, eventually that information also makes its way into the markets and the yields change. So perhaps the wisdom of the crowds gets it right. It is an interesting debate. And I remember going to the racetrack once with somebody in UB saying, it's wisdom of the crowds means the favourite's always going to win. And I said, no, check the odds on the favourite. If it's 3-1, that means it's going to win 1 in every 3 races. And yes, that generally happens with favourites. So you got to make sure that you're taking that into account before you start betting that way. Yeah, interesting. I had to play around with them. They're very interesting to have a look at if anyone's interested in that kind of stuff.
What was the most interesting one that you saw?
I think the ones around AI. What's going to be like Google Gemini was rated, I think, about a 75% chance of being the best AI, and go into a definition of what best was. It's according to some ratings service that rates AI offerings. So I found that interesting. Yeah, but there were things like they were offering markets on what the S&P 500 would end up in. They sort of gave 3 ranges. So that's interesting to see if that comes to pass. They were offering similar markets on how low Bitcoin would go and how high Bitcoin would go. And I'm looking at it going, this should be a financially regulated product. It's a bet on financial markets, which is the same as investing in an ETF or taking a short position on the market. So if you want an unregulated market to place your bets, go for it. But I think they might get regulated in time.
I can see, I'm on the site now, I can see one is how many tweets Elon Musk will post between December 9th and December 16th, 2025.
Well, if I was Elon Musk, I'd take that bet and then match it and then, make it fulfill his own prophecy and make some money, which is one of the problems with companies like Betfair. In Australia anyway, the betting agencies were stopped from doing live in what they call in market bets because if there were cases where a cricketer, you could bet on whether the next ball is going to be a wide. And of course, organised gangs would pay cricketers to bowl a wide on the 5th ball of the 3rd over, and then they'd bet. If you looked at the betting activity, there'd be nothing for 3 overs and a huge spike on the 5th ball of the 3rd over. Same with tennis players. You bet on whether the next serve will be an ace. Again, same sort of thing. You pay a tennis player to not return a serve in the 4th set of the 3rd, whatever, a 3rd game in the 4th set or whatever. So it's corruptible, highly corruptible. Just as if Elon Musk is smart, he'll take a slice of that action and then tweet the required number so he wins the bet.
Fascinating.
What else you got?
Oh, couple of we watched a couple of things, not out and out recommendations. We watched the new Knives Out movie, which I think is called Dead Man Waking or Dead Man Walking or something like that, or Waking Up the Dead. And it's not perfect, but it was actually, I thought, better than the last two, and much more watchable than the first two. More of a straight detective series, detective story this time. And just a ton of amazing actors in it.
Yeah.
Cameos all over the place. Glenn Close and who else was in it? David Hayden Church, Josh Brolin. Good, great cast. We just kept looking at it going, oh, that's so-and-so, that's so-and-so. So that was fun. Although, part greats watching Daniel Craig with long hair and a southern accent, playing Benoit Blanc, the salt gentleman from New Orleans. It just doesn't sit well with me. But yeah, I liked it. Worth watching. And I've been reading Ben Elton's autobiography. I think I've got this thing for flawed pieces of art at the moment. I mean, they're the things that intrigue me the most. Like I've been a Ben Elton fan before. Haven't been for a while. I thought he went off the boil in his later years. I thought Blackadder was great. The Young Ones was great. His stand-up was good. I thought Spark and his first couple of books, Gridlocked, were amazing. And then they became, I thought, fairly formulaic. But just interesting to watch his take on all that kind of, and how he would say, oh, this got panned or that got panned. And you could take the point of view that they were rubbish. However, we did this under duress, we did that quickly and blah, blah, blah. I'm like, that's why they were rubbish. He just kind of wasn't acknowledging that in the book. So very flawed, but still a great read for what was going on, in that sort of English sphere of influence in the 80s and onwards. He became friends with McCartney and George Harrison and Fry and Laurie, Emma Thompson and all those. So good read.
Well, speaking of that, I watched a couple of episodes of the Alien Earth series since you recommended.
Mm-hmm.
And I'm enjoying it, but I was so happy to see Adrian Edmondson.
Yes, isn't he great?
He's fantastic. I was like, holy shit, is that Aid?
Yeah.
That's Vivian.
Yeah.
Oh my God. I haven't seen him in anything since Rick Mail sort of died and did his funeral or the obit or whatever he did for him on stage, which was great. But yeah, it's terrific to see him in a serious role.
He's a good actor, isn't he?
He doesn't have a lot to do in it, but what he does do, he's great as that sort of, I don't know what he's supposed to be, but some sort of conciliary. And the other thing I'm enjoying a lot about it, but Timothy Olyphant, I'm a big fan of Timothy Olyphant from the Deadwood days and from Go and stuff like that. But to see, do you think he is supposed to be a Roy Batty-esque character in this?
A Roy
They've kind of
Batty-esque. Oh,
well,
yeah,
Roy
right.
Batty,
Yep.
Rutger Hauer's character in Blade Runner.
Yeah.
He's got the hair and the mannerisms. It's a different universe, but still in the Ridley Scott universe. And I think they're like, well, we can't say he's a synthetic from Blade Runner because we aren't making Blade Runner, but he's really a synthetic from.
Well,
it's Wayland Yutani. What was the corporation in that?
Hold on, I just keep thinking of
Tyrell
yes.
Corporation.
Well, he reminded me more of the Lars Erickson character in Aliens, the second one. So there's been a history of that character before.
Yeah, but I'm enjoying it. And I'm loving the fact that at least 2 episodes in, the Xenomorph is kind of a side character. You don't really see it much, which is how it should be. It appears, it kills everybody for a few seconds, and then it's gone.
Yeah.
Everything's more about the characters and the stories and all that kind of stuff.
And the other aliens, which are far worse than the Xenomorphs that come along.
Yes, horrifying. Horrifying.
Yeah.
Speaking of horrifying, so I've been reading the Bond books, as I mentioned to you last time. So I finished Casino Royale, which, very un-Bondy. Like, it was obviously when he started it, Bond wasn't the Bond that became the Bond. It was a very sort of much more subtle one-note character. And half the book is about Baccarat and then him getting his balls smashed under pretty simple torture by Le Chiffre. But the chauvinism and the misogyny is the most fascinating part of it for me. I read books in conjunction with GPT, so I'm always like, copying lines or paragraphs and putting it in GPT and going, did he just say what I think he just said? Or explain the rules of Baccarat to me because I'm not following this, blah, 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 blah. But like there was this one line where he's fantasizing about having his way with Vespa. And he talks about how she's so independent that each time he sleeps with her, it'll have the sweet tang of rape. And I'm like really? Really? And there's a lot of that kind of chauvinistic stuff in it. And then I'm reading Live and Let Die, and there's all this Haiti and Negro races finally showing that they have some intelligence and all this kind of stuff. I'm like, oh. And GPT was like, yeah, even in 1954 when this came out, even American publishers, yeah, I don't think they started to just some subtle rewrites in the American edition.
Okay, didn't know.
But talking it through GPT and trying to understand this mid-50s chauvinism, I was talking to Chrissy about it last night. Like, there was all of this sexual repression, I think, in Western Christian societies where women were supposed to be virtuous, weren't supposed to enjoy sex, where mothers would tell their daughters on their wedding day that marital bed they should lie back and think of England, this kind of stuff. And, Chrissy growing up as a Mormon said that they got all of that stuff too in her day. It was something to be endured, not to be enjoyed. And so there's this mindset on behalf of guys like Fleming that, women want it. When they say they don't want it, that's just their religious conditioning, and you just need to break through that, break it down. They really do want it. You just need to, break your way through their religious conditioning to unleash the sexual animal inside them, and they'll be grateful and thank you for it afterwards when you do it. And I can kind of understand that from that perspective. It's shocking to read 2025, but trying to understand how that was, what his mindset was, how that was acceptable to educated, literate men in the 50s. And
yeah, well,
I assume women too.
Could also have been written for shock value too. I mean, I don't know if it was, because I read Fleming's autobiography, and he was very sexist and misogynist.
Well, I sent you a thing on that because I asked GPT after our last episode, and it was like, no, this is exactly how Fleming thought. Fleming thought that Bond was wish fulfillment for him.
Yes.
Bond. That's who he wanted to be, right?
Yeah, that's who Bond was. And wish fulfillment for, most young men in America and England at the time too.
And then, of course, we know that Connery, in the 80s, Barbara Walter interviewed him, and he said, sometimes it's okay to hit a woman if she won't shut her mouth. Was a guy of that era. Need to be taught a thing or two.
You're destroying all my heroes, Cam.
No,
but I must admit, when I read them from end to end like you're doing now, back in the 80s, I didn't cringe. It didn't strike me as being over the top. It was. I guess it was smack bang in the middle of the Roger Moore Bonds. It was all about sex and beating people and things like that. And I just read it as being a male fantasy.
I never had a fantasy to get the sweet tang of rape.
True. No, but being the secret agent, running around the world, saving the world, betting heroin, all that kind of stuff.
Yeah, I get that. And he's in this one I'm reading now. He's in New York to chase down Mr. Big, and he's being put up at the fanciest hotels. He's living the life of a billionaire. I'm like, really? I don't think that's how MI6 agents travel, really. I think they're on a budget.
Yeah,
anyway.
True.
So that, what else?
Did you see I don't know if you got it, but did you see the article I sent you last night via Messenger? A Day in the Life of Tom Baker?
No.
Oh, it's fantastic. It's looks, it's from his Doctor Who days, but the photograph is him standing at a bar, and he's written this surrealist, almost probably his tongue in cheek, but the surrealist 24 hours of what his life is about. You know, waking up at 6 a.m. because he fell over because he was too tired to get to bed, and then, just getting up, having a shot of whiskey, and then going in to do his voiceover work, and it just goes on and on from there. I just loved it when I read it. It's fantastic.
Tom Baker. I've got a Tom Baker action figure somewhere in my office. Tom Baker and Carl Sagan. I was trying to show Fox Carl Sagan's Cosmos the other day. It's like Luke Skywalker, Tom Baker, and Carl Sagan, probably my three heroes when I was Fox's age, when I was 12.
Mm-hmm.
Yeah. And Bruce Lee, probably.
Oh. Well, I couldn't think of who my heroes were. Asimov, I think, would have been my hero when I was 12.
Well, we had to go do the US show, where I'm going to be talking about the man that launched Asimov's science fiction magazine in the 19.
Which one was that? Amazing or Astounding? Or
it was called Asimov Science Fiction.
Okay, cool. Can't wait.
Yeah, put you like that. Thanks, Tony.
Thanks.
Have a good week, everyone.
See you. Oh, happy Christmas. I won't be here next week.